Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Thursday. It's October the 11th, 2012, and global markets were up for the day. Basically, we saw the European markets jump to the upside and close to the upside. We saw that in a lot of places, everywhere except for the U.S. I just want to show you a quick little picture here of what we're seeing here in French markets right quick, just not spend a lot of time here. Note your low point here on this candlestick close is actually higher than the one you saw previous, and you get a bullish engulfing candlestick today. There's no actual strength to the downside here. This little downtrend line right here is still in effect. You had to close above it here, and you sold back off it down below that point. Now you've got to close out of it again. A lot of our reversal points are coming at or below the 50-day moving average, and that's an important area that you should be looking to find support. Whenever you're in a true bullish uptrend, you will find support at the 50-day period moving average. When you fall below it, it can happen on occasion. You did over here, and you will typically find yourself, for one reason or another, finding some news that justifies why we've oversold, and all of a sudden we reverse back in their direction. That's what I'm looking for right now in the markets. Quick glance here at Milan's market. If you're looking at Italy, you can see we've simply bounced again off the 50-day moving average. Very bullish candlestick formation, again with a bullish engulfing situation. We've seen this before here as well. I see nothing here that indicates a breakdown. All we're doing is pull back to support and bouncing off of that, and now our low point on this candlestick is higher than the low point on this candlestick. Next stop will be a breakout of this one, in my opinion. Quick little glance here at German DAX composite. You can see what you have right now is a little bounce happening. Again, bullish candlestick continuation to the upside, bullish engulfing the previous candlestick, and the previous candlestick is simply an inverted hammer. Basically, a shooting star happens when you actually rally up to a point. You get a shooting star when you get that kind of a signal. You sell off. When you come down here and you get in the other direction, it tells you for a bounce, and you bounce in a direction. Here you get the same thing, and you're bouncing in a direction. Note the relationship of price to the 50-day moving average. Very bullish, still continuing the uptrend. There's nothing here to get all concerned about. Now let's go look at the U.S. markets. Quick glance here at the not the intraday, but the daily candlesticks for the Dow Jones Industrial Average. You'll notice we've been down for 4 consecutive days in a row here. Got stopped out of our long position, pulled back down here for 4 days, and now we have found ourselves at the 50-day moving average with, what is this? This is calling for a bounce in the other direction. This is not a sell signal. Now, this is an important piece to note. You also find yourself below the 30-day, below the 30 line on the ultimate oscillator, where you typically find your oversold conditions, your bounce points. So again, this is another key factor to keep in mind. People out there, it seems like everywhere I look, people are bearish. They've just decided that, oh, okay, this is it, this is the top. Well, I'm sorry, I'm just missing it. I keep looking for it, and I keep looking for it, and I just don't see it. So let's go show you what I do see. Okay, this is the Dow Jones Industrial Average chart for the past 2 years, and each one of these candlesticks represents a single week of trading activity. That means that this last or most current candlestick formation hasn't actually completed being formed. It could change because it's not the end of the week just yet. So keep an eye on this. But whenever we look at the long-term charts in the U.S. and we're looking at the U.S. markets, I always look at the long-term charts for big moves that I could see, maybe a big bearish formation, big bullish formation, but I always check those against all the other charts. They should all be telling me the same thing. When one of them is telling me something and the others are telling me something completely different, then I don't give it a lot of weight. But when they're all telling me the same thing, that's very important. Now, I want you to remember, if you've traded with us for a while, I've been watching these videos for a while, you remember this call here, the head and shoulders pattern. We talked about that before it happened. We called this top here as well. All these things make sense to us because on the charts you're about to see, they all tell us the same thing. Over here we had a head and shoulders formation going on, and we told you when this was forming, this could develop into a head and shoulders formation. If we fail to break out at this point, we come up here, we roll over, and you'll notice a couple of things. Number one, as you start to roll over here, we confirm the formation with a candlestick that looks like a shooting star formation. That is a timely indicator. It tells you now is the time to get short. You get short at this particular point, you see this rolling over, you're making money. As she closes below the neckline here, you do the math, you measure this distance out. So, okay, this mathematically from the breakout point is how low we expect price to fall before we start to get a bounce or reversal, that kind of a thing. And that's what happens. And you get this reversal happens here. You get also a bearish formation. You got this rising little wedge formation here telling you look for a breakout to the downside. That happens. And you could have gone short at that point, and you would have been stopped out had you attempted to do that, because again, it was not timely. There was no shooting star signal here telling you this is the top. So you actually close below this, and then you bounce back up here to make a new high, and then you actually reverse it in the other direction, and you'll notice a shooting star signal, and you sell off here. Now we get into another chart formation. This is a bullish chart formation. It's simply a bull channel where price is actually trading within this range right here, just moving to the upside, to the downside, and we continue to do this for a while. Now we get up here, no shooting star signal, and we've pulled back down to the lower trend line, the support line. Nothing here indicates peak. Nothing here indicates we're going to go break down to a whole new Great Depression or anything of that nature. All we're doing is pulling back to support line. Now, if you want to get bearish, then you'll need to see something happen. You'll need to see a close of the candlestick. Remember, this candlestick is not finished forming. You'll need to see this candlestick close on Friday below this downtrend line. Now, once that happens, you could say, okay, I'm going to short there with the stop set off the top. Okay, that's fine. That would make sense. You would have an argument at that particular point in time. However, you can also find situations where you will come down, actually, maybe on Friday, you could actually see some more selling, and then she comes back up here and closes back within that channel. That would be piercing the channel. It would not be breaking down. It would still indicate you are early. You are trying to call a peak that hasn't actually materialized just yet. That's another reason why I'm just not seeing this move that people keep talking about. Last item to note, and you'll see this on all the charts, where would you go when you broke down? Well, you'd fall to support. That's how we were able to talk about this previous pattern and how the low point was. There was support back here we talked about. You'd be bouncing off of that point there. When you break out of here, you're looking at the same thing. Well, you've got a support here. Okay, you can go ahead and zip through that, even though that's basically where you're at now. And you've got one that's going to be here, and then you've got one that's going to be just below that right here, and you're going to get the 50-day moving average, and then you got another one that's right here. You don't have a lot of downside potential here. The facts are you still have high point, higher high, higher high, low point, higher low. You are in a bullish overall uptrend. You're trying to change in direction and say, oh, I'm going to go short. I really think you're missing something. Just so I don't waste too much of your guys' time, I'm going to speed this up. Yeah, I mean, I can go over this and get in more detail, but main thing here, remember this candle, this is the the NASDAQ right now. We're looking at a 2-year chart. Each one kind of represents a single week of activity. You can see a head and shoulders formation confirmed here at the same time period you were seeing on the Dow Jones Industrial Average. You get the reversal situation here. You get the actual trend chart like that, okay? And basically come up here and you get a shooting star signal. Okay, we called that top as well. Down she goes here. We get into this little bullish channel. Where's price activity? We're just pulled back to it. All we're seeing on the shorter time period charts with the daily candlesticks are reversal signals. That should make sense. That's what you should be looking for because you pulled back down to this period of support again. If we were to actually have a situation where we sold off, where would we fall to? Probably the 50-period moving average where you've got support here again. Not a big move to the downside again, and that's not any reason to get all that bearish. You'd still have a series of series of highs, higher series of lows. Nothing here to indicate a new bear market. The Russell 2000 Small Cap Index, it's basically a photocopy. We've got the same thing. We've got the nice head and shoulders formation there, called the bottom there, called the peak. Here we get a shooting star signal, the sell-off, the whole thing happens there. Makes sense. Remember, you get up to this bearish chart pattern indicating we should be looking for a bearish scenario, some kind of a breakdown. We get it closed below that point. Had you taken that, it's a short opportunity. In some cases they will work. In other cases you'll be stopped out because it's not really the high. That's why I really look for those shooting star signals. They tell me the exact timing of my short is right. In this case here, you would have went short here. You would have seen the money to the downside, and you get the reversal signal happens, and you get, again, this little channel. This is a bullish channel telling you to look for opportunities to buy off of support here, where I'm at now. And you'll notice we're not even at that point here on the Russell 2000. The most bearish condition chart that we have right now as far as trading close to that point would be the Dow Jones Industrial Average. However, the Dow actually represents the fewest number of companies that are out there. So keep that in mind when you're looking at the Russell 2000 Small Cap Index or the S&P, which tracks 70% of the market. You're not actually breaking down at this point. The SPX and the S&P 500 Large Cap Index, same photocopy. Overall, a long-term chart. We got a basic 2-year chart. Each one of these candles represents a single week of trading activity. We got the old head and shoulders formation there. When all the charts told us to do the exact same thing, it was a no-brainer trade there, right? Then you get this little bearish forming here. People could have argued this was the top, this was the top, this was the top, this was the top. Not until you break and close below it. Once that's happened, then you can say, okay, did we have a shooting star? Yes, in this case you did. You sell it. In this case right here, you don't. You don't even have the breakdown of the actual bullish channel here. There's nothing. You're way too early if you're calling this is a bearish opportunity. It's not timely. That's the bottom line. For my personal analysis, I've shown you every single chart for the U.S. markets, the long term and the short term. They're calling for a bounce in the short term. They should be doing that. You should be getting those signals because you're trading at that support line. So if you actually close by Friday or get close to the close, like I say, you're really bearish and you want to stay that way, that's cool. Wait till Fridays and you get like 30 minutes away from the close. If you believe that you are going to close below this downtrend line, then take your short position, keep your stop here, and then just pray to God that you don't have to see a bounce that goes back up there, gets a little bit higher, gets a shooting star signal, and then I get short and you get stopped out. That's what I'm talking about. So basically, that's my overall viewpoint. Is I see what you guys talking about, the selling that we're seeing, but I just don't think you're timing it just yet right. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free. And all we ask in return, refer a friend. God bless, take care, and I hope you enjoy your trading. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.